we're welcome back, ladies or gentlemen, whichever individual is watching this video at this time. My name is Larry James. I own a company called Speak with Larry, no spaces, and I'm going to talk about the fundamentals when you're talking about stock investing on this video. It's actually called "What is Stock Fundamentals?" or "What are Stock Fundamentals?" I should say. Now, this is a very essential part of understanding how to do this online investing or the stock market investing, because you need to really understand what you're looking for when you're making a decision to begin this process, right? Now, one of the things that I'm hoping that you guys are picking up with this process is that there's actually an order of things that you'll want to uh, put your mindset in before you actually just jump into the actual fire of investing in the stock market, because you can lose your hat, but you can win. You can do really, really well. And there's a lot of money that's being made in the stock market. But you need to understand the fundamentals, just like what my company teaches, how to set up the foundation of an online business. Now, the foundation has to be solid. If the foundation isn't solid, then it can't sustain a lot of growth, because it would be too much for it to handle. Like a good example was, you probably heard of a preacher by the name of T.D. Jakes, and he was saying, they were asking him a question on an interview, and they were asking him about like a new pastor that was coming into the church, and he said they asked him he said if he wanted to ruin a new pastor, he would give him control of the church, because there's so many moving parts that you wouldn't be able to do really well not knowing the fundamentals and the foundation of how that process works. And I thought that was really profound. But it's all a process. Whatever you're going to learn, whatever you're actually contemplating, adding as a skill, you got to go through the learning process, and that's one of the things that I call the gatekeeper. It keeps people away or keeps people out who are not willing to go through that process, and it seems to be fairly effective. Let me show you my shirt right quick. I'm in Dallas, Texas. I got a Dallas Mavericks shirt on today, and I'm doing this episode from Dallas. Now, again, this is called what are stock fundamentals? And we're going to begin. Now, we hear the word fundamentals on almost a daily basis. Analysts, executives, and investors appear on CNBC daily to talk about the fundamentals of stock. Fund managers are always talking about how this stock or that one has strong fundamentals. Excuse me. There are also traders who, in turn, proclaim that fundamentals can't actually matter, and investors should rely on stock technical merits instead. But what exactly are they? Well, I'm going to share those with you right now. So, the fundamentals of stock, in the broadest terms, fundamental analysis involves looking at any data which is expected to impact the price or perceived value of a stock. This is, of course, anything aside from the trading patterns of the stock itself. As the name implies, it means getting down to basics. Fundamental analysis focus on creating a portrait of a company, identifying the fundamental value of its shares, and buying or selling the stock based on that information. Now, some of the indicators commonly used to assess company fundamentals are cash flow, return on assets, conservative gearing, history of profit retention for funding future growth, the soundness of capital management of the maximization of shareholder earnings and returns, and so on. Now, The fundamental approach, fundamental analysis have a staid approach to analyzing stock performance. They look at a variety of factors that they believe influence a stock's performance. And these include the industry as a whole, the competition, a company's management structure, its income and revenue, as well as its growth potential. Now, all of the data is public and readily available, generally through a company's financial statements. The goal is to ultimately identify which stocks are priced correctly and incorrectly by the market. To help you visualize this, let's use this analogy. Think of the stock market as a shopping mall where stocks are the items for sale in the retail outlets. Their sights are set solely on the products in the mall. Shoppers are dismissed as an unreliable emotional herd with no inkling of the real value of the goods for sale. And fundamental analysis moves slowly through the stores seeking the best deals. Once the crowd moves on from the PCs, they will take a closer look at the ones they were passed over. Fundamental analysis may take a stab at determining the scrap value of the PC, stripping it down to its hard disk, memory cards, monitor, and keyboard. Now, the stock market is akin to calculating the book value or liquidation price of a company. Let me say that again. In the stock market, this is akin to calculating the book value or liquidating price of a company. These analysts also take a very close look at the quality of the PC. This is going to last or will break down within a year. The fundamental analysis will pore over the specifications, scrutinize the manufacturer's warranty, and consult consumer reports. Similarly, equity analysis checks a company's balance sheet for financial stability. Then the fundamental analysis may try to understand the performance of the PC in terms of, say, processing power, memory, or image resolution. These are like the forecast earnings and dividends identified from a company's income statement. And finally, the fundamental analysis will put together all the data and come up with an intricate value or value independent of the current sale price. If the sale price is less than the calculated intricate value, the fundamentalist will buy PCs. If not, they will either sell the PCs they already own or wait for prices to fall before buying more. Now that may be a little kind of a hard pill to swallow, or kind of a little, I didn't really get all that, but just play this back and, take your time. And I always have the text right there for you to go along with it. But it's very important. It's very essential. And this is a great way for you to understand exactly how to do this. Now, good fundamentals don't equal profits. Performing fundamental analysis can be a lot of hard work, but that is arguably the source of its appeal. By taking the trouble to dig into a company's financial statements and assessing its future prospects, investors can learn enough to know when the stock price is wrong. And these conscientious investors are able to spot the market's mistakes and make themselves money. At the same time, buying companies based on intrinsic long-term value protects investors from the dangers of the day-to-day market fluctuations. However, the fact that the fundamental analysis shows that a stock is overvalued does not guarantee it will trade at its intrinsic value anytime soon. Things are not so simple. In reality, real stock prices behavior real stock prices behavior relentlessly calls into question almost every stock holding, and even the most independently minded investor can start doubling the merits of fundamental analysis. There is no magic formula for figuring out intrinsic value. When the stock market is booming, it is easy for an investor to fool themselves into thinking they have a knack for picking winners. But when the market falls and the outlooks is uncertain, investors cannot rely on luck. They actually need to know what they're doing. And that makes sense, right? Because I was telling you about gambling. You can guess or you can gamble with the process, but if this company is about to go bankrupt versus you just thinking, then you're in an advantage. Now, the next segment is fundamental analysis versus technical analysis. And pay very close attention to this because there's a difference here. Now, fundamental analysis is much different from its cousin, technical analysis, where fundamental analysis focuses on measuring its stock intrinsic value. Technical analysis concentrates solely on the trading and price history of a stock by looking at trading signals and other analytical tools to evaluate the strength or weakness of a stock. Technical analysis believe that the stock's past performance, its price and trading activity can help determine where it will go in the future. In essence, the theory of technical analysis is rooted in the fact that the movement in price is not random. Instead, it believes that the patterns and trends are identifiable and repeat over time. To demonstrate, let's go back to the analogy that I just gave. Technical analysis ignore the goods for sale. Instead, they keep an eye on the crowds as a guide for what to buy. So if a technical analysis notices shoppers congregating inside a computer shop, he or she will try to buy as many PCs as possible, betting that the growing demand will push PC prices higher. Now, the bottom line is that there is much that investors can do to learn about fundamentals. Investors who roll up their sleeves and tackle the terminology, the tools and techniques of fundamental analysis will enjoy greater confidence in using financial information, and at the same time will probably become better stock pickers. At the very least, investors will have a better idea of what is meant when someone recommends a stock on strong fundamentals. Got it? That makes a lot of sense, right? Now, you see, I told you this phase 3, is going to be more hands-on and more mentally being able to walk through a process that you can, jump into the game after, you finish the full course. Well, actually before, if you're doing, your fundamentals, and this particular video covers very well what you need to know about and how important the fundamentals are when you're investing in stocks. And I really wanted to get that to you guys because it's great information. It's great information. Now, again, if you're doing the same thing that I'm doing based on your knowledge or your specific subject, which is what my company teaches you how to do, how to set up the foundation of an online business while assisting you with becoming more comfortable speaking about it, then you are in phase 3 of your video creations, as I am, right? But whichever 3 months you choose to, set aside to create this process for yourself is up to you. But it works, and you gain an exorbitant amount of knowledge based on the subject that you decide to talk about. the information that you decide to share, whether it's something you already know about, or like in this case, something that you didn't really know a lot about. But now I know quite a bit about the stock market simply because I'm going through this process. Okay. All right. Again, I really appreciate you investing in yourself, because we have to do that. And don't let it stop here, because there are people who have products that they sell that can get you from point A to point B really quickly. And that's where you want to go. Even if you have to invest a little money, if you have your business set up correctly, you can deduct any educational courses that you buy on your taxes. And that's what, that's the way to do it. That's what I do. So with that, again, my name is Larry James. I really appreciate you stopping by and investing into who you are and who you want to be. And as always, share with someone else what I've shared with you.